Welcome back to Brazil Crypto Report. Today I'm joined by Lucas, Giorgio and Matheus Moura of BRLA Digital. We talk about how they're building a new Brazilian BRL-pegged stablecoin, as well as the growing adoption of stablecoins in Brazil. Great. So we are here today with Lucas and Matheus of BRLA Digital. Great to have you both here.
Thanks for the invite, Aaron. Pleasure being here.
Thanks for having us.
Amazing, amazing. So to get started, why don't you guys just give us a quick introduction of who you are, what's your professional trajectory, your career, and then how did you get into crypto? Lucas, you want to go first?
Yeah, sure. So basically, my name is Lucas. I'm CBDO and co-founder here at BRLA Digital. My background is I'd say a little bit more boring in a sense. Like it's a typical TradFi background. So my entire career, I've worked at private equity shops such as Pátria Investimentos here in Brazil. Recently, I was actually Matheus's partner for 7 years at a equities firm called Hicks Capital. And I started touching crypto right about the first mania, which was like in 2016, but I really had absolutely no idea what I was doing. I was just like, buying Bitcoin, thinking that, it would moon soon. And I obviously, like most of the population, invested and divested in the worst possible part. So I had my fair, experience with crypto in 2016, 17, left it. And then in 2021 to 2022, basically me and Matheus, and we'll get into it, but me and Matheus and a couple of other partners, decided to jump ship from the TradFi and join this interesting crypto space to start our first crypto venture.
Amazing. Matheus, what about you?
I came from the traditional market as well. So I work at the BTG Pactual as my first job in operations side, credit risk, some kind of boring stuff as well. And then I moved to Hicks Capital when I met Lucas. He was my partner there for 6 years. And we worked that together. It was a traditional equities fund. And then in 2021 to 2022, we moved it out to start doing this endeavor in crypto. My beginning on crypto was in 2016. My thought was almost the same of everyone. Bitcoin is the new gold, so the price should be like 100x higher. And then I just bought it because of the speculation and wait. I didn't buy that much, so I'm not rich. But when in 2020, when the DeFi stuff started to get real, I created my first wallet, and then I realized that the experience was as bad as internet in 2000s, but I could foresee a lot of opportunities. So that engaged me to start thinking about pivoting my career to focus 100% of my time in crypto space.
Very cool. And now you both are just in it for the tech, right? Yeah.
Yeah. Always for the tech in bear market.
Exactly.
Well, which is why you're building stable coins, right? So, which are we talking about here? So, you're not stable coins, I guess, stable coins are designed to not appreciate or depreciate. So, stable sort of value, right? So on that front, tell us a bit more about BRLA. I'll get the acronym right here eventually. So maybe tell us a bit about how it came about, and then, what are you guys trying to do? And I feel like you guys are a small team, but you guys are like everywhere. Every time I go to a conference or an event, there's always like guys in BRLA t-shirts.
Guerrilla marketing, man.
So you guys are definitely like punching above your weight here. So congratulations on that. But why don't you give us, Lucas, you want to tee off, like what's the kind of the backstory behind BRLA here?
Sure. So as I mentioned, me, Matheus, and so basically we're 5 founding partners here. 4 of the founding partners, including Matheus, they all studied together engineering in ITA, which is one of those leading engineering schools. Kind of all knew each other. We were all working TradFi jobs and kind of decided that, this is an interesting space to start exploring something. Our first idea was actually we wanted to build a bank which used crypto as its rails to offer dollarized products to Brazilian clients, but with a Web 2 and a more traditional, like I'd say front end. But that's like, that was just kind of like our first idea, just to show you like where, where we came, and maybe we'll go full circle. But that was like our first idea. And what we realized was one of the products we wanted to offer was based on a quantitative strategy that we used to have with our own personal capital. And we kind of like looked at each other and said, we all came from investment management firms. We know how it works. Maybe we should just get this kind of like hobby product and maybe just actually do a regulated fund. So that's what we did. So that was pretty boring as well. But we basically were approved by Brazilian CVM, which is the Brazilian SEC. We were approved by Ambima. We actually opened a regulated asset management firm called Ada Capital. We launched our first fund, and we started out from there. So it's basically quantitative investment strategy. We had a little bit of a long bias as well further down the road. But something that caught our attention was, first of all, we always wanted to build something in crypto. Like, it's sexy to build in crypto, right? Especially when it's something with purpose. So that was like the origin of our first idea. And so we were always, just looking into this crypto space. And on one side, you're doing like the boring job of, investing other people's money, which it's interesting, but, it's not like what we entered crypto for. And on the other hand, we're like looking at all these awesome projects and all of these things that, of course, there's a lot of garbage out there, but there's a lot of interesting stuff going on. We realized was that stablecoin, I mean, again, we can get into the market here and basically, for who doesn't know the market, like dollar denominated stablecoins, they have been dominating for ever since stablecoin started, right? And we're talking about two suspects here, which is USDT by Tether and USDC by Circle. And what we realized was that doesn't actually converse with like normal life, right? When you get crypto is like 99.99% dollarized, while traditional markets and just our lives aren't 99.99 dollarized. They are dollarized, but not as much as it is in crypto. And so during our endeavors, looking for investment opportunities and just thinking about stuff, we realized that there's this opportunity to grow non-dollar stablecoins in the world. And the thesis was, especially in countries which much like Brazil, for a number of reasons, the native population is very used to our fiat. So it's very different. Brazil is very different from like Argentina, which is just like, absolute chaos. We don't need a deep dive in that rabbit hole. But in Brazil, people are very used to using like Brazilian reais. And so what we realized was, for you to invest in crypto in Brazil, or if you want to build a project in Brazil, like you have basically two huge barriers, which with the rest of the world only has actually one, which is the first thing is you have to convince your users to go to crypto. And I'm not speaking about like the crypto natives. I'm speaking about like general mass adoption. So how do you like achieve mass adoption in Brazil? The first thing is you have to convince people to go to crypto. But the second thing is, by the way, everything's in dollars. So it's kind of weird. Like you have to convince them to go to and think with a dollar mindset. So that's something we realized, there's like a number of things, and Matheus can compliment me, but we started realizing that, if we did something which could help Brazilian users easily access crypto products and at the same time help international and interesting and awesome crypto projects come to Brazil and have this seamless integration, I think it's a home run. And it helps everyone. So it'll help the user, it'll help the investor, it'll help the projects, it'll help the companies, and it'll help mass adoption. So that's kind of like when we just sat down and realized like there was something to do here. We converged with our mindset of starting BRLA as a extremely, I'd say, regulated in a sense. We wanted to be close to the regulators. We wanted to be close to policymakers. And then we'll get into more detail on that. But what we sat down, we said, we wanted to do something a little bit more Circle-like. Of course, props to Tether for their size, but in the sense that, we wanted to be as transparent as possible, as close to regulators as possible, and kind of just like play by the book as possible. I keep mentioning the word as possible just because, regulation is still coming out and Brazil is pretty crypto friendly, but we try to play by the book. So that's kind of like when we sat down and just looked at each other and said, okay, perhaps we should pivot our business. And so what we did was we closed our investment manager, gave back all of our clients' capital back to them, and just full-blown pivoted, focused on BRLA and eventually BRLA Digital, which is I'd say it's a suite of other offerings powered by our stablecoin, which we can get into detail. But I'd say, like, long story short, that's the birth and growth of BRLA.
That's super interesting. I think I remember I was even chatting with you back when you guys did the pivot, because I think we had, we were catching up. Maybe I hadn't talked to you maybe like a month or so, and I was like, "Oh, how's everything going with ADA?" And then you're like, "Oh, we actually like closed it down, and now we're doing a stable coin." I was like, "Wait, what?"
Yeah.
So props to you guys on I mean, it's part of being a startup, right? Is you gotta pivot when you see the need to pivot, right, and seize the opportunity while it exists. And what I also find interesting is what you guys are doing. It kind of goes against some of like the, I guess maybe we'll call it like the mainstream narrative around stable coins in Brazil, which is like, oh, Brazilians, they want to get out of the local currency because they're afraid of inflation and whatever. And they want to get into, USDT, or they want to get into like, the BTG stable coin or whatever it might be. And there's obvious reasons for, there's obviously a use case there, right? I think obviously there's the inflation hedge. I think Brazilians also just tend to like, they kind of compare they compare the real to the dollar, right? So even if like, say, inflation is flat, but like the real is depreciating against the dollar, and it's like, oh, I can't buy as much stuff when I go to the US. So you feel poorer, even though like in Brazil terms, you're still the same. So I understand the reason why there's a lot of validity for having a USD peg stablecoin. But what you're saying is that there's actually kind of this untapped demand for real peg stable coins. And would love to kind of just unpack here, like what exactly is the value proposition? What's the business case for this? Maybe Matheus, if you want to take that question, and then Lucas, if you want to chime in.
Right. So basically, it's common for crypto native and people from the traditional markets to look at crypto only as with the lens of investments, right? So if you think about investments, it's, of course, you have to think that the great use case for stablecoin is to dollarize the world and give everyone opportunity to keep your money in dollars, right? But the real life, when you look with business lens, this is not the way everyone should do business, right? Because we spend our money with other things than investment. And in Brazil, everyone spends their money in reais. Everyone in crypto and from traditional finance are used to think about crypto using only the investment lens, which basically means the main goal of a stable coin is to dollarize the world and give everyone the opportunity to make dollar investments. But in reality, if you use business lens, most people don't use dollars to do day-to-day transactions in Brazil. So if you want to reach people to sell products using blockchain infrastructure, you have to be able to settle in reais. This is why we believe that creating a native real on-chain is good for bringing innovation to Brazil. Every company that we spoke with in Brazil that was innovating in crypto had creating a stable coin in the pipeline to solve this problem. Also, when we went outside of Brazil and we spoke to companies, why don't you come to Brazil, bring your products to Brazil? What they said to us is it's very hard to connect to Brazilian banking infrastructure. I have to regulate myself. I have to partner with a bank, a payments company, an FX bank, a compliance provider, and with an exchange to exchange reais for crypto. So basically, they have to orchestrate 4 or 5 APIs and connections and technology integrations, which is very hard. So what we did was we went to this like tough path of connecting with all those players, being a regulated entity in Brazil, pending regulations, as Lucas said. And now by connecting to our stablecoin, which is a simple on-chain connection, everyone can connect to Brazilian banking system in a very simple and compliant way. So we are trying to bring innovation from outside to Brazil. Brazil is a country with 200 million people, with a lot of crypto activity, and with a great regulation that probably will be a tailwind for attracting crypto companies. But if they don't have this bridge, it will be very hard for them to establish themselves an operation here. So we want to be this bridge for every Web3 crypto-friendly company operating in Brazil without any headaches.
So no, if I could just add something, I think like one thing doesn't absolutely substitute the other. I think, just like the real world, there still is like a bunch of, there'll always be dollar. Well, I mean, for the time being, there'll always be dollar use cases. And I think both things will coexist, like eventually, especially for like other things like cross-border. But definitely, like, I still think like the USD denominated stablecoins do have an important part in the industry and always will. But I just think both things can, they can walk hand in hand, no problem.
And then maybe walk us through some practical like business cases of like how would this be used, in the field essentially. Like what are the profiles of customers that might use this, whether it be like an exchange or whether it be like a DeFi platform or whether it be, like a mom and pop merchant, the guy selling, coconuts on the side of the road or whatever. Like who are the types of people that would use this in reality?
Great. I think there's a lot. Those three use cases are potential ones. So, for example, we have one DeFi protocol that uses to onboard Brazilian client. Their company is incorporating in British Virgin Islands, and they basically use us as embedded crypto for their platform. So it's on and off ramp. Brazilians send them reais, receive BRLA, and they can buy their products. So this is one.
So how would that? So can I just pause on that really quick? So it's like, okay, would I send that platform like a PIX transaction or something, and then it would be converted, and then in my wallet on this app on this protocol, I would have BRLA. So basically, it's like PIX convert. I can send the funds directly from my bank account basically, and it shows up via PIX.
Yes.
Okay.
It's a B2B2C experience. So with BRLA, you can buy those company products, which are basically almost ETF.
So, and then Matheus, you had mentioned about the exchange use case. Why don't you tell us a bit more about that?
Yes, sure. For example, we are working with Exchange for Philippines to help them expand their operations to Brazil because, again, to do that, they would probably need 12 months planning and a bunch of consultants. But by using BRLA, they can do that in 2 months, just integrating with our APIs and accelerating their time to market, and doing this in a very simple way for the clients as well. It's just send the PIX, we will receive an exchange. You can trade using BRLA pairs or even doing swaps on their platforms. That's it. So that's basically, we can do that for a DeFi protocol and also for an exchange, but also for merchants as well. We are working with some other partners to empower Argentinian merchants to receive PIX from Brazilian tourists. So imagine a Brazilian go there, buy some stuff from a merchant, pay with PIX using any bank they want. The merchant will receive BRLA. They can hold that until they have expanding need, and they will transform this BRLA into ARS, which are their currency, and pay there. They don't need to receive money in ARS, which is very hard to change for other currencies. They can receive, don't internalize money in Argentina, maintain outside Argentina in BRLA or USDC, and then only transform when they need to spend this money. So this is also a use case that we are exploring.
Okay, great. And then, Lucas, do you have anything else you wanted to add on just the use case front? Are there any other kind of maybe verticals of types of potential customers who would use this?
So great. I think like if you could just get what Matheus said, and if you could divide BRLA Digital, I guess, into like, I'd say 3 main products. So our first main solution would be, I guess, just typical on and off ramping. So basically, we can help any company who'd like to plug into Brazil and process Brazilian users. We're, like you mentioned, Aaron, we're connected to the Brazilian PIX. We can process anything from BRL to BRLA or to USDC or to USDT. So we've had a couple of like just typical use cases. That's like a pretty much no-brainer. We have some pretty competitive pricing, just given we know how to do business in our background. So I guess that's one of the things. The second thing would be, and what Matheus said is something that we offer, which is called our business account. So what Matheus had said was, any foreign company which is a little bit crypto friendly and wishes to do some sort of business in Brazil, it's just like, it's, we're in Brazil. We know the size of the headache it is. And so he has to come, he has to build a regulated entity, he has to open a bank account, he has to talk to lawyers, accountants, he has to have KYC, so on and so forth. And so what we do here is basically we have a solution which is either A, powered by APIs, or B, has a more UX friendly solution, which is you can plug into our solution and we can process all of your payments for you. So if you want to access Brazil, all you have to do is, we'll do a Nora client on the final business, and he can process Pix in and out. He can, sell products, he can pay service providers, and we do all of, I'd say, like all of the hard part. So, we can process, like I mentioned, the Pix, we can do the KYC, we can do the FX. So you can think of us as kind of like a one-stop shop for any foreign company who looks to do business in Brazil, but doesn't actually want to, have the headache of opening a local entity, because we do it all for them. So I'd say like this is the second use case, which is what I wanted to just reinforce, because in this case, I think there's like, we already have a couple of clients, and here you can have kind of like anything. So if you think about it, an exchange can use this solution not only to onboard clients and for the trading, but also if you have affiliates to pay, if you have service providers to pay or receive money from service providers. If you need to do KYC, you can use our solution. If you're some other sort of Web3 related or friendly company, you can also use this solution. So I'd say we have like this business account just helps like companies do business in Brazil in a more seamless fashion. And like what Matheus mentioned, it's plug and play. Like literally in a couple of hours, you're ready to operate here in Brazil. And the third thing is our stablecoin, which is powers the other two solutions. But what we love doing is thinking about solutions using our stablecoin, but also offering our stablecoin to like all of these business owners, which have like some pretty cool ideas, and just start like building on top of our stablecoin. So either doing DeFi products or trading pairs, which is a little bit more basic, but also thinking about remittances, thinking about cross-border transactions, thinking about what you can actually build on top of our stablecoin infrastructure, and that's also pretty exciting. So I'd say like if I could just divide the three solutions, that would be it, and that's kind of some other use cases that we're also seeing.
Okay, very cool, very cool. And then maybe just to kind of draw some, maybe some just help give some extra color to what you guys are building, just by way of comparison. There's a few other like Brazilian real pegged stablecoins on the market right now. So you have like BRZ from Transfero, Mercado Bitcoin, I believe, has one, and I think both of there's kind of a world of difference in traction between some of these products. But there's maybe just kind of explain how does what you guys are building here differ from what has already been launched and is already on the market, and like why does Brazil need another real pegged stablecoin?
Yeah, I guess I have one point, and then Matheus can just compliment. But we know the guys at Mercado Bitcoin pretty well. We know the guys over at Transfero. They've all done some pretty awesome work, especially paving the way for the other emerging stablecoins. But I guess I'd say like one of the main things is just we avoid conflicts of interest, in the sense that we don't have our own exchange, so we don't really have like this conflict of having competitive business, right? Because I guess one of the things is, if I have my own stablecoin, but I also have my own exchange, I also have my own OTC, I also have my own, you name it. It's tough, right? Like how can I convince like a competitor of mine to use my own stablecoin? So I guess that's like one of the first things I just mentioned was, we and that's one of the things we started off with was, we should really do something which doesn't have any sort of conflict of interest with our clients, and that's kind of like where we launched from.
Yeah, and in terms of technology, also as we spoke, we focus a lot on business. So for this, we have to build robust and very high performance APIs to conduct our business. So I think in the technology side, in terms of uptime and other SLAs, we are very, very sharp in terms of technology, and also we chose to be local as well as company, and to be regulated under the umbrella of virtual asset service providers in the future. So we maintain a very high standard of transparency and matching of supply in on-chain against off-chain real money. We are about to start getting audited, just as Circle is doing. So I think that those are the main differences, I should say.
Okay. And then let's talk a bit about just your overall business model here. Like, so like, how do you guys make money, I guess would be the first question. And then, as far as the reserves on the stable, like how are you backing the coin? I mean, you guys kind of employing the standard model of, I mean, I guess there's multiple different ways of doing this, from just, 1-to-1 with fiat currency, purchasing, treasury bills, that kind of thing. Talk a bit about how you guys are just ensuring that it's everything's backed and is liquid. So yeah, whoever wants to take that one.
Okay, so basically we have like 3 types of banks that we work with in our day-to-day operations. The first one is our operations bank that don't touch our reserves. It's just for our company's needs. We have our transactional banks, which are banks that we are heavy in technology and API, that we use to conduct mint and burn process, receive and send money in real time. And then we have our reserve banks AAA like Itaú, BTG Pactual, Bradesco, banks that we only use to keep our reserves there invested in treasury bills. So we are not even taking the bank risk into account here. In Brazil, we have this pretty solid treasury market that can settle in the same day, different from the US. So basically what happens is we can have 95% of our reserves in treasury bills and only 5% of our reserves in cash to day-to-day operations, different from what is the standard for Circle, for example. But this is the way we think it's the most boring one. And for us, boring is the sexy when we're talking about stablecoin, to maintain our peg and to have the collateral under very high standard of security.
Got it. So essentially you guys are able to liquidate treasury bonds within like a day, essentially, whereas in the US, I think it's still like T+3 for I guess
T+2.
Yeah. T+2. Okay.
And it's funny because just if I could add something, like, and we see, we know the guys over at Circle pretty well, and we speak to guys in the US, and we explain the PIC system, and we explain the daily liquidity for government bonds, and like no one actually believes that exists. Like how can you like transact like real time for free? So it's pretty insane, and I guess it's the best of worlds for our users, because again, like Matheus said, we have liquidity, immediate liquidity. We can honor payments pretty fast. We won't have like the Circle problem with Silicon Valley Bank, but it's also a challenge for any company in Brazil that wants to do a stablecoin, because we don't have the luxury of having 2 or 3 buffer days to deliver capital. So we do have to be pretty sharp in the sense that we have to be able to pay our user, and we have PICs working for and against us in this case, right? We can't be like, oh no, it's 4 days to liquidate. So we also have to have some pretty sharp systems, which we have in place, obviously. I just wanted to add on that.
Yeah, that's a good point. That's helpful color. And I think the world of sort of like stablecoin reserve treasury management is like this whole like kind of weird like rabbit hole that I think most people don't really have any idea of how it actually works, or like what even the business model of a stablecoin issuer is, or all the kind of operation. You have to be very operationally sharp to be able to preserve, to ensure that you're liquid at all times. And we obviously saw what happened in March with Circle and whatnot. And obviously, like the PIX is kind of working for you and against you, because everything becomes more instantaneous. And also the expectation among the Brazilian consumer is that everything is going to be instantaneous now as well, because every transaction is like instant, right? So it's like, what do you mean you have to wait 4 days? That's way too long. So I wanted to talk a bit more about just kind of like stablecoin usage in Brazil in general, and maybe even kind of broaden out this theme to include a bit more of just like the value proposition of just non-dollar peg stable coins generally, because just worldwide, like you really haven't seen a whole lot of uptake of non-dollar peg stable coins. Like Circle has a digital euro, which is, I guess I haven't really checked the numbers on it, but it doesn't, I haven't really heard much about it since they launched it. Obviously the BRZ stable coin had, I believe at one point it was the largest non-dollar peg stable coin out there until maybe a year ago or so, but like there doesn't really seem to be a huge like demand for this sort of thing, and I guess I'm just, it almost kind of feels like sort of like that joke, like there's like, you have a Chicago school economist who's like walking down the street and they see $100 bill on the floor, on the ground, and you bend over to pick it up and it's like, that can't be real, right? So if it was a real thing, someone else would have picked it up already, right? And, so I'm just I would like to get your thoughts on just, what do you see as the value proposition here of non-dollar peg stable coins, particularly in Brazil? And like, is this a model that can be extrapolated to other markets? And, and is maybe like the current dominance of dollar peg stable coins really kind of a function of that investment narrative that we were talking about earlier, where it's really more of people trying to get out of their, day-to-day currencies and into dollars, and it's less about kind of the utility of like, how can you sort of, where it seems like the value proposition of what you guys are providing, like, I don't think anyone's going to, buy BRLA to like protect, I'm going to hold my hold my reals in BRLA form instead of fiat form, but it's really more of like a conversion and like in a on and off ramp mechanism to just provide additional utility to the broader, kind of crypto ecosystem. Anyways, I've been rambling here, but would love to get your thoughts on these questions to whoever wants to start.
So I think I can start looking more at the top-down level, but it's basically because of what I said before. Crypto is a very heavy on investments, and we started with the builders being economists, very deep tech guys, or people from the traditional finance that were building things to speculate. And because of that, there wasn't a place for non-USD stablecoins. You don't need that if you are only thinking about investments. But in this next cycle, with the start of this bear market, we are seeing a lot of people building in crypto to create products and using blockchain as rails for doing things better in the traditional sense. So trying to convince people to interact with blockchain, but because you give them a value proposition and not because you have to convince them that money will end or something like that. They don't even need to know that they are interactive blockchain. So when you start to conduct business on chain, and the on-chain economy of real stuff and not only trading and investment start picking up, I think we're going to need non-USD stablecoin to be the settle of money, as we have in any country that works with other currencies than the dollar. But especially in Brazil, I think that is a place to improve a lot of things under the cross-border transaction space. We have a lot of big hurdles in FX, cross-border transactions, payments, and it's very hard for a global company to open a bank account and receive and hold BRL. And this is something that a stable coin can solve in the first day operating, right? So we believe that especially in Brazil, we have this huge use case because real is a currency that is very difficult to interact with, different from the dollar. But if you look at the world, a lot of companies, big companies like Wise, eBanks, dLocal, those companies have a bunch of cash in many places of the world to handle cross-border transactions in a fake instant, because they only can do the transaction instant because they have cash, but it's a fake instant way to do transactions. There is a lot of inefficient to have those amount of cash stopped in many places. And imagine a world with a lot of non-USD stable coins, that would be a no-brainer to do only with the technology that we already have, right? Oracles to get the price and decentralized exchange to do the swaps. So we believe that this world will change dramatically the globalization across countries, and also the speeding of moving money across countries as well. It's something like a global PIX, but not provided by any central bank, but in a decentralized manner.
Right. So, so you mentioned that, just really quick, Lucas. So you mentioned that like the real is difficult to handle. It's a difficult currency to sort of to come in and out of for global companies. And obviously, I mean, it's a soft currency, quote unquote soft currency, and in terms of how currencies are classified, like it's not like a reserve currency. But is there anything like inherently anything inherently different about the real versus like another perhaps emerging market currency that makes it harder or easier or harder to get in and out of?
Yes, because there's some currencies that it's easy to open a bank being an offshore entity, right? It's easy for us to open a bank account in Europe, in some places in Europe, and having a euro denominated bank account. But to do that in Brazil, it's almost impossible. You almost need to open a local entity and go have boots on the ground in Brazil to have a current BRL denominated bank account. And to do that, you will face a lot of regulations and something that a lot of burdens that you need to handle. You have a team locally. So it's very hard to do that using BRL, the fiat money. But with a stablecoin, it's very easy to have a wallet that can handle a stablecoin, right? You just have to open a MetaMask, or if you want to be more fancy, create a ledger or some MPC technology. But as to hold stablecoin is very easy, and our stablecoin have peaks powers, so you can receive stablecoin by traditional Rails transactions and send in the same way. So with BRLA, it's very easy to interact with Brazil. Of course, you have to be not crypto native, but at least crypto friendly and understand a little bit about crypto. But this is something we are trying to put in the background as well, right? And maybe someday in the future we will be able to interact with non-crypto native companies in a way that they are not even knowing that they are interacting with crypto, but they are doing stuff in a much better and simpler way and cheaper as well than by going to other channels.
Got it. And Lucas, I'd cut you off earlier. Did you want to add anything on this point?
Yeah, no, I was only going to mention like on that other like just whole emerging stablecoin thing. I just want to mention that so we're part of a group called Stablecoin Standard, which is pretty interesting. So basically, it's this group which joins a couple of like emerging markets, not emerging market, but emerging like market stablecoins. And I guess the big denominator with them and the big denominator with all the people we're speaking to is this cross-border disruption of the SWIFT system and of other systems. So that's like one general denominator for like emerging stablecoins. I'd say it's like how is exactly what Matheus mentioned, which is how do you settle amongst all of these emerging countries. So and again, and I don't know enough about like deep diving, but in particular countries. But I know that there's a very large stablecoin in Singapore, Indonesia. I know that there's a Canadian dollar, a bunch of Euro guys popping up. I know in the Middle East there's one, and we actually partnering up with a blockchain called Ripple to do something more cross-border like, and they have a couple of partners as well in Africa with emerging stablecoins. So it's all pretty interesting for the emerging market sense. It's especially for the cross-border.
And that's super interesting. I think that's a story that I'm hoping to see a lot more reporting on coming out over the next few years, because I think that's super interesting. And it's the world's focused on Sam Bankman-Fried right now, but like there's real stuff going on in these markets, right? Like real deployment of the technology. And I want to just ask you guys quickly here about just stablecoin usage in Brazil in general. Just with the Receita Federal numbers over the last like 6 months or so, there's just been like this massive uptake in particularly USDT reporting. And I don't know if it's a question of like there's just the amount of usage is just skyrocketing, or maybe more people are just reporting that they're using it. But it's something like 80% of the entire volume of crypto that's being reported. So I think for the most recent month for July, I think it was something like 3 billion worth of like USDT transactions. I'm just wondering, like, do you guys have any visibility into like what's driving this? Like who's I mean, is this investments? Is this people making cross-border payments? What's driving all this activity?
That's a good question. I think first we do see a lot of denomination of crypto in Tether inside centralized exchanges and decentralized as well. So this is something that pops to mind when we see these volumes. But of course, there is a lot of volume outside exchanging those numbers as well that are also big. And other thing that we know that some companies are doing and generates a lot of volume is on the sports gambling side, like betting. There's a lot of companies based on Gibraltar, Curacao, Malta, other countries that have proper regulations on those subjects, that they collect money in Brazil using Pix, and then they settle from time to time to their matrix operations using USDT because they are used to it, and also because they have to pay a lot of providers around the world. So it's better for them to receive USDT and pay instantly than receiving USD, which is weird for most people, but makes a lot of sense for them. So we also believe that there's a lot of money on this front as well. And of course, we heard a lot of people talking about remittances in USDT, but it's hard for me to understand why it would be much better in Brazil, because today we have this regulation around FX banks that I don't know if remittance using the FX banks and USDT can be a much more competitive than the traditional ones. But for companies that are used to handle with USDT, like the sport betting, makes a lot of sense to prefer this channel than the others.
Interesting. And then I know you guys had recently, you guys went to Token 2049 in Singapore a few weeks ago, or back in September. And I know you guys, had a pretty solid week of like just meeting, trying to kind of evangelize the Brazil market and really looking for, new prospective customers. And just wanted to get your thoughts on what was that experience like? What's the interest in the Brazil market, and what was kind of the response to the solutions you guys have built? What kind of product market fit are you seeing?
Singapore was a very interesting week for us. We got to know a bunch of very interesting, people and prospects on a high level. Surprised us just the sheer amount of people just doing business. It was so full, and you wouldn't even suspect that you were in a market, in a down market in crypto. But what caught our attention, and unfortunately it's the truth, like a lot of people didn't know much about Brazil yet. So you kind of had like some just particular points on, I know that the central bank is doing some pretty interesting things. I know that the Brazilians like crypto, but still, like, there's a lot of just like people just browsing around but not actually coming to Brazil. And so it was actually pretty fun to meet a couple of other Brazilians there, and we're all just look at each other like we have to bring all of these people to Brazil because they have absolutely no idea the opportunity they're missing. And that goes from exchanges to like all of the other DeFi and Web3 companies. So it was a very good starting point. I mean, the sheer amount of people that we met was amazing. There's gonna be a couple of other events next year which we want to go to, but I think that and I can't go into too much detail here, but it's something that me, Matheus, and some other Brazilian players have been thinking about, perhaps doing something together and in a more institutional sense, going together to these events and just planting the Brazil flag in a more organized way. Just because, again, it's just so many people and you really don't stand out. Like there's just like so much going on. So we have to do something in either via side events, which is something you did, right, Aaron, in Consensus in the beginning of the year, in the middle of the year, which was awesome, by the way. I think doing something more organized would be very beneficial for like the Brazilian ecosystem as a whole. But we're getting there. I mean, it was the first first foot forward. But it was an amazing trip, and hopefully we'll have a couple of other ones next year as well.
Amazing. Well, anyway, that concludes my questions, but want to just turn it back to both of you for any final thoughts, and how can folks get in touch with you if they want to learn more, if they want to reach out. But Matheus, any final thoughts, and then Lucas will close with you.
Okay, I think one thing that was surprised me on Token, but I am thinking there's a lot recently, as Brazil is ahead of the curve in terms of innovation, financial innovation. Like, we have Pix, the Drex pilot is very well done, and the Drex will be a great innovation as well. and we also have a upcoming regulation of virtual asset service providers coming. The central bank is very pro business here, and we are a big country with a lot of economic activity, and those factors should put Brazil on the front of crypto innovation and on the top tier A list of countries to go of every crypto company. But we do have to do our job of spreading this word. So it's a great time to be a builder in Brazil in this space, in this Web3 arena. And I think we are going to have a lot of tailwinds from companies trying to come here and do business here, because we are doing almost everything right, at least relative to other countries. So I guess I'm very excited for what is to come.
Awesome. I share the same sentiment as Matheus. I mean, you could feel just like what I had mentioned earlier, right? You explain pigs to some people from outside Brazil, and they don't actually believe, like, how does this exist, right? So Brazil has all its problems, but there's like these little specks of hope and opportunity. But I think it's just that I think now is the time that we've been seeing, I guess. And in token 2049 as well, less speculation and more, I'd say, like hard work and building. So that was really impressive. Like that was really cool to see. And I think Brazil has everything, like always, to embrace it and bring it home and just like be the capital of crypto. And we actually spoke to this a couple of like 2-3 years ago with a person, and he was like, I wanted Brazil to be the capital of crypto, and we sort of thought it was a joke, but the way things are panning out, I don't see why it has to be like Dubai or why it has to be some other place. I think Brazil has everything to have some pretty good crypto prospects. And then just to finalize here, if anyone wants to reach out, you can reach out via our website. So it's BRLA.digital, or if you're a little bit more traditional, BRLA.com.br. Both work. You can follow our pages on LinkedIn, on Twitter, and on Instagram. And if anyone's a Web3 friendly company, wants to build in Brazil, need ramp solutions, want to build on a regulated and transparent stablecoin, feel free to reach out to us. We're more than excited to help projects grow. And one of the things that drives us absolutely mad in a good sense is like we have so many different use cases like approaching us and just really cool projects, really different. Like, hey, I'm doing this, I need a stablecoin. So like we're actually like, as an infrastructure provider, we're seeing all of these projects going on. So obviously it's a tokenization and all the traditional stuff. There's also some really crazy, like out of the curve, interesting projects which are coming to us. And we're like, if these guys do this, it's like it's an innovate like X market or Y market like completely. So it's of course it's sad that Bitcoin and Ethereum is down, but like if you look at the building side of it, it's like really exciting. It's a really interesting time to be like building in crypto.
Absolutely. We're very well said. Well, Matheus and Lucas, I really appreciate your time. It's great having you both on the show here. And thanks everyone for listening, and we will catch you next time.
Thanks so much, Aaron. Thank you so much for having us.
Take care, everyone.